Hey, everybody, we are back. It is Monday, May the 2nd. We have had a crazy day in the markets. It's end of market, so just wanted to review some market movers. Have we hit the bottom yet? I don't know. We've got a bit of a chatting here. We've got some stuff going on here with Bloomberg. Let me bring that up here in a second. It's crazy, crazy day again. Let's take a look here. Crazy day again. Let's take a look here. All right, let's take a look here. Market movers today.
There's a big debate between Chevron and Exxon which one to own. I say own them both. One of the things that's interesting, Carl, is that index funds own 413 million shares. So now you're starting to talk about a very big base that's not going to trade. And I continue to think that oil, even though China's not using a lot, hangs in here.
I think the perspective from both Charlie Munger and the response from Robinhood are probably to a certain extent extreme. I think somewhere in the middle is probably the reality of what Robinhood is all about. I keep using the word normalization. Normalization also has to occur as it relates to a lot of the speculative behavior in financial markets. I think that's a process that's unfolding. I think Robinhood, through quote unquote innovation, is going to have to be more traditionalized as markets move forward and markets look a little bit more structured, and markets look a little bit more respectful of valuation. So as far as the stock itself, I wouldn't buy it. I thought earnings were not good last week, obviously. I know, and I'll talk about Cathie Wood and the ARK Fund. It's a big position for her in that innovation fund. I'm not sure I see the innovation there with Robinhood. They're going to have to somehow compete and innovate if they're going to be able to effectively move this company forward.
Facebook has done a great job on this particular element of what they did this quarter with their earnings, because that previous quarter was absolutely horrendous. We all know that. But then they came back. They had revenue growth. They had, the monthly active users, the daily active users were all back. They really did backpedal to back where they were, even though they're still working on Meta. I was fine with that. They took their eye off the ball. Now it's back on the ball. So I think that's why we're seeing Facebook sort of react the way it has lately, which is a lot better than some of those other names. It took its medicine. It was awful when they made those mistakes. But I do still think that there will be acronyms that come out. Jimmy's going to come out with something very creative, I'm sure. Apple's going to have to be a part of it. You heard what Buffett said this weekend. He would have bought more, but Apple started moving back up to the upside.
If we look back over the last couple of years, particularly after March of 2020, it was pretty hard to go wrong if you were willing to put some money in and invest. So I think a lot of people, whether they are really being encouraged by Robinhood or not, were experiencing a lot of success. And so that just fueled the interest even more in the moment, because Scott, as you mentioned, everyone was at home. There wasn't a lot else going on. So a lot of people really became very engaged. But I think after moments like we've had this year, there's a real sense of, oh boy, maybe I don't know everything I thought I knew. And maybe this isn't my second calling here. And I can get out and I can go places and I can go to events and sporting events and so on. So I do think that engagement in general is just going to go down for this company, especially based on what we saw over the last couple of years. I still think that's repeatable here in the short term.
I don't stay with losers very long. We mentioned before that FANG ultimately has ended. And I think a lot of what I'm doing, Scott, was in anticipation of that. I'm equally weighted. I rebalance quarterly so I could be far more tactical. And that's exactly what I'm doing. Just look at the overall sector exposure right now. I came into 2022 with a combined exposure between technology and communication services at 33%. Now I'm sitting at 21.5%. Other competing strategies can't do that because they're rebalancing twice a year. So I feel really good about what was liquidated from the portfolio. I feel really good about what we added to the portfolio.
What Robinhood did in its so-called education
So a bit of a
of
crazy
retail
day today.
investors was
We've seen quite a
encourage
bit of
them
activity
to
with
pile into
Meta,
fanboy stocks that
Robinhood,
had
and
no
others,
earnings,
Apple,
high
after
multiples of
the
sales that went
talk
up when money was
by
cheap
Warren and
or
Charlie today.
cost
If you haven't
nothing,
caught that,
and have
that's
plummeted
we've got a
since.
video there. We
There
cover
is a
the
lesson to be learned
Berkshire
from that.
Hathaway
I will grant you.
AGM for
There is also a
2022. It
lesson
was
to be
a
learned
highly
from thinking
anticipated
about
event.
Warren Buffett
Warren
and Charlie
Charlie
Munger
definitely did
evaluating
not
financial statements,
disappoint.
balance
Pretty
sheets,
awesome
and
stuff.
profitability.
We've got the
Sold
full
at the end of January,
coverage
Apple
in
at
one of our other
170.
videos here. So take a
Now
look
Apple
in the
pulls
channel.
back. We're able to
Right now, the stock
re-enter
market,
the position at
futures have
157.
edged up
That's
after the
based
tech
on a
rally.
strong
We've seen the U.S.
momentum
stock futures
factor
open slightly
for
lower
Apple over the previous
Monday
quarter.
evening after
Amazon
we saw some
down
serious
27%
whip
from where
whip
we
up and
sold it
down
on
of the
July
markets during
30th
regular
at
trading hours.
33.27.
There's been a
Believe it or
contract
not,
of the S&P
Amazon
decline,
has
and
actually improved
we're
on
trying to
the
figure out
quality
what's happening
factor
here. Where's the
in
market
terms of
moving
its balance
at the
sheet.
start of the
So
week?
glad to enter Amazon
We've
here
seen
again,
heightened
being
volatility
tactical.
and still selling
something like a
pulled the majority of
HubSpot, which I
equities.
would consider to
Averages
be
sharply
a much better
lower.
version of
S&P
CRM that
posted
allows
an
us to do much more machine learning
8.8%
on our
decline
CRM
in April
systems.
for
I
its
think
worst
that's
month
one
since
big
March
area where, like, owning
2020.
customer first-party
Look,
data,
volatility
I think
skew
there's
in both
companies like
directions
Clear,
in this period when we
that
expect
are
heightened
partners of
volatility
ours, but I
because of
see what
all the
Clear is doing
confluence
in
of factors that we
airports
see,
and
the
in sports venues
geopolitical
and things like
to
that.
earnings,
And
to
so
the
I see,
Fed, to
you see a
inflation.
set of companies
We're
that
going to
are
have big swings like this,
enabling
and it's just
a
going to
much
keep on
deeper
taking
level of
place. So
CRM
we've
and
got a
customer
few things happening
relationships,
this
which I
week,
think Web3 is all about
and
data
we're going to
and
try and
first-party data.
get
And I think
covering some of the bigger
businesses
announcements
that
taking
help
place right
people
now.
build
So
their first-party
we're going to constantly see the
direct-to-consumer
volatility in the
relationships
markets.
are going to be big
Again, in
winners, and
terms
those are
of
the types of
what we're looking
companies,
at in terms of
I
good
look at as
buys.
the future of
Again,
where
we're not
Web3 is
financial
going to be
advisors,
going.
but we're
Overall, when
providing you
you're
with some
going to
feedback
look
on
at
where
the
we think the market
ETF,
is
you're
at.
going to see the
Still bullish on
average PE has
Apple,
come down
still very much
significantly.
bullish
That's
on
where I want it.
Amazon. What's
It
happening?
sits right now at
Microsoft has
about
done
20.
exceptionally
Beta
well
has come down
with their
to
cloud
about
services
1.09.
division.
We've
Once
got a
again,
lot
kind
of
of
blue
moving them
chips.
to
You've
another
mentioned
level.
those four.
Google, albeit
Healthcare
did not
carried
perform
an
as well,
overweight.
but
In
their
addition,
cloud
new
services offering
positions
has
in
again
Coke,
been kicking
Pepsi.
butt. So
We've even got some
let's
positions
keep
in
moving on here
gold
for the kind of end of day wrap up,
companies,
and
Barrick Gold and
let's take a
Newmont
peek here
Mining.
what we've
So
got going
this is
on
looking more a more
with
diversified,
let's
qualitative
go
type
back
of
here to
product
CNBC
as we're
Pro.
positioning for the normalization process with the Federal Reserve over the coming months. I think that's going to be important. You're defending against elevated risk, elevated volatility.
One of the ones that stands out within this environment right now is Microsoft. You know, if I think about the nature and the composition
just like I'm
of the
saying.
business model for Microsoft, it's extremely resilient to what we see right now in this inflationary environment. The growth of the cloud computing business, the ability for Microsoft to continue to show leadership there, focused on the digital transformation that's not slowing down. You know, if we look at the surveys of the IT professionals in the large companies, they're not going to slow down in terms of what they're going to deploy for dollars to provide more infrastructure, continue the trend of the remote workforce now that the genie is out of the bottle post-COVID. So those are all things that we like, and we think that those are long-term trends that are not going to go away. And if we focus on some of these companies, especially a company like Microsoft that does have a really strong balance sheet and good cash flows, that's definitely going to be one that's going to be a little more resilient within this environment.
So Zoetis, this is the largest provider of vaccines and medicine for pets and
yeah, like I
livestock.
said,
Its stock
Microsoft
is
is a
down
solid
30%
buy.
here.
We
think there's an
bought
opportunity.
Microsoft,
It's a cash
and
business,
big fans of
not
what they're
dealing
doing,
with
their business
Medicare and
model.
insurance
Like I said, in
companies,
terms of
and there's
what
been a
you
lot
need
of
to know
pets
for
that
the
were
week
acquired
ahead,
over the last few
we
years that
are
will likely
bond
be
yields
needing
are constantly
care.
running up against the
Okay, I should
Fed
note as well, you
meeting.
sold PayPal and you
We've
sold
got earnings
Merck.
in March,
We obviously know what's
quarter
happened
on
with
pace for
PayPal.
slower
So
growth.
Brenda's
So
said
again,
enough is
we've just
enough.
got slower
Covered it.
growth
Pete, what's your final
consistently
trade?
being a theme that we can
I'm going
expect.
to give you GDX. I've
Um,
seen a lot of
Again,
option paper
Warren
coming in there
Buffett
lately,
and
Scott. It's
Charlie
way
Munger
down from where it
made
was.
some
I think there's an
serious
opportunity for some upside
announcements
here.
about
All right,
what they're
Farmer
doing with
Jim.
Activision, which is top of
Paramount
mind,
reports earnings
and
tomorrow
whether or not
morning.
that deal is
Scott
going to
will
go
be
through
on
with
with you tomorrow.
Microsoft and
I'm
whatnot. We're
not
going to
gonna
have to pay
hide.
attention to that.
I know you're not at
But
all,
overall,
Jim.
Microsoft still,
And that
is a
space,
buy
man.
worth
I
looking at.
can't wait to see that report because that space.
Of course,
I'm trying to look at it
Apple,
right now.
it's
Joe,
it's
go
the
ahead.
golden
I'm gonna take a
apple
look at this one,
for
Doug. Go ahead.
Buffett. He would have bought more shares if he could
Yeah,
have.
we added
We've
Occidental
got some
Petroleum.
changes,
It's
some
one
market
of four
news as it relates
names
to
that we
Moderna,
increased in GOT
and
energy
they're
exposure
being
now at
cleared for
6.43%. north 3%
kids under
relative to
5 and 6 here. So we've got
4.17% for the S&P
Moderna is
500.
looking to be
Okay.
ready.
I'm looking at
A
Paramount.
review
Jimmy.
by the Food and Drug
52-week
Administration
high, $47
will be meeting in
to
June. afternoon, and
$30, and a lot of those
Pfizer
stocks
will
have sold
be
off hard
putting out
lately.
some data
Yeah, we're gonna have to
in
see if they
terms
have the
of
5 million
its vaccine
subscribers
data
that
for
we think
children
they
under
are.
5
If
by
they
June to
do, that
review.
really
So
puts to bed whether
significant
Netflix was
movement still
industry-wide or
with
company-specific.
major vaccine providers like Moderna to Pfizer, which is also going to continue to change the landscape as we see it. So let's go back here to kind of market wrap up and see if there's anything else we can glean here. Let's take a peek here. Just a crazy day again. Let's take a look at some of the stocks. Let's bring this back up.
Apple, they have to stick to where their fiscal year ends, when their second quarter ends, and basically they couldn't. Like when I spoke with
so Jim,
both
is,
them
you know,
with
since
my
what day is
yesterday,
this?
we could
This is
not
the
go
April
over
29th. So this
that.
is a bit of last week. Again, going
recap that we
into
do does not include
this
future,
week,
and
Apple
when I
still
look at it like
down a
that,
little bit
I
in
do
terms
believe
of
that Apple
their
is,
complete
if
offering.
you sell it here,
But
you're
you know,
gonna
like,
make
look,
a big
they're
mistake.
not going away
Because the
anytime soon. They've
poker,
got
I
a
think,
strong
is gonna
foothold
actually
in
say you gotta open.
multiple
I
areas.
think there's a big
And over, if you're looking at a long-term win, you know, they're the place to be right now.
The people who
Let's take a look at the
help.
street, see what's going on here. Let's take a look at what Monday is. Monday's been like. We've got a number of different upcoming moves: Apple, Uber, Bath and Body Works, and more. Let's take a look in here. Let's see what Morgan Stanley is saying. Let's open this bad boy up. Share that screen. Let's take a look here. Zoom in a little bit. So we got Morgan Stanley reiterates that Apple is an overweight. We see multiple tailwinds to drive a re-rating over the next 12 months, including continued adoption of 5G smartphones, PC market shares gain on the back of new and differentiated Apple silicon-driven Macs. I have one of those, just killer product. McDonald's is again still a buy. We've got overweight on Wells Fargo. We've got a downgrade of a number of different companies. Bath and Body Works continues to outperform the market, which is pretty crazy stuff. Bank of America initiated a buyback. Let's see here. We've got that happening. Got a bit of a Citi removes UPS from focus list. Bank of America reiterates Uber as a buy. Again, a buy on Uber. I don't know about that. Yeah, we're going to see mobility recovering. Uber's got a significant amount of logistical issues, changes taking place. So we'll have to pay attention to that kind of as we move forward. Morgan Stanley reiterates Exxon is overweight. We're going to continue to see some great changes. Big fan of Yum Brands, have owned them for 10 years. UBS reiterates Yum Brands as a buy. Yum is the owner of Taco Bell, KFC. They're just in a wonderful position. They've just been killing it for so long. Definitely a long-term pick. I'd put them in the middle of the pack in terms of, in terms of a buy. Let's take a look here. Let's see what else we got going on in CNBC today. Yeah, just crazy stuff today. I think we're going to hit up and switch it over to some Bloomberg. So once again, we're seeing that the U.S. futures dip. Dollar remains steady. Let's take a look here. S&P futures fell 0.2% as of 7 a.m. in Tokyo. S&P rose 0.6%. Not as a bad week as the start of week as last week, but still, we're still in some trouble, folks. Bloomberg Market China Open is going to take place at 2100 hours, so we might come back for that. Let's take a look at the wrap up for the day here. So JP Morgan saying stock market rebound not as far off as strategists feel. Negativity in the U.S. stock market has become so overwhelming that a rebound may not be far off. pessimism peak has hit a all-time high here. Let's bring this up. What are we at? 59 here. So we'll see if we get a rebound based on that. We've got worries about China's growth outlook, obviously a negative take on the Q1 earnings report season, concern about higher bond yields and further tightening of financial conditions from a strong dollar all appear to have soured equity and credit investors, states JP Morgan. The bank maintained energy as overweight, saying the sector is under-owned since weight sits around just 4% of the overall S&P. And they also believe that it's a cheap sector on all valuation metrics. So energy stocks are discounted. Long-term oil prices well below the spot price of 100. We expect dips and to be bought from a broadening investor base, including energy companies revamping share repurchases. So time to change up the portfolio, review kind of what you're looking into. If you were heavy on FANG over the last few years, now is the time to reassess. As I stated, really still bullish on Microsoft. Let's take a look at MSFT here. Let's bring that bad boy up. Again, just a solid performer. We've seen a little bit of volatility over the last, let's see. Let's take a look at the 5-year max. Again, like I said, just a solid performer. We've seen a little bit of volatility here. 2020, we saw some dips at the usual times of crisis. September 2021, we had purchased early on here in, let's see here, 2020. We're looking at 150. There was a dip. Let's take a look. 2019. I think we were right around here, $98. And now we got to a high of 343, 342 at the end of 2021, and it's kind of slowly gone down back and forth between 280 and 309. As of today, it's 284 after hours. Maybe it's 277. But again, just a strong company, strong position in terms of what the focus is for Microsoft with their heavy focus on cloud and the cloud business. They've definitely been able to kind of outperform, I feel, the majority of the FANG stocks. So, okay, with that being said, we are going to kind of wrap things up. We're going to do a bit of a market review probably later on tonight. But yeah, it's time to rebalance your portfolio, take a look at what is happening in terms of the next 12 months and, look at energy as a potential investment opportunity. Take a look at grain, food. These are areas where we're going to see a lot more investment due to inflation, due to supply chain issues and so forth. So with that being said, thanks so much. And thanks for tuning in. We'll see you in a few hours.